Tesla navigates turbulent waters, political headwinds, sales slump, and strategic shifts amid global challenges. Tesla, once a beacon of innovation in the electric vehicle (EV) industry, finds itself at a crossroads as it battles a confluence of political tensions, market pressures, and operational hurdles. Despite its status as a leader in EV adoption, recent developments have sparked concerns about Tesla's resilience amid shifting geopolitical landscapes and intensifying competition. This article delves into the company's current challenges, strategic pivots, and the factors driving both optimism and skepticism among analysts. Stock volatility, tariffs, sales slump, and political fallout. Tesla's shares plunged nearly 6% in early April following U.S. President Donald Trump's announcement of a new 25% tariff on imported cars and trucks, a move aimed at boosting domestic manufacturing but excluding consultations with Elon Musk due to perceived conflicts over his political ties. The tariffs, which also applied to auto parts from Mexico and Canada, triggered broader market sell-offs, dragging down competitors like Ford and GM as well as tech giants such as Nvidia. Analysts noted that Tesla's reliance on Canadian and Mexican components, e.g., batteries and semiconductors, could inflate production costs, squeezing margins unless offset by regional manufacturing shifts. Compounding these pressures is a reported 40% sales slump in Europe, where competitors like BYD have surged ahead. While Tesla dominates US EV markets with over 70% market share, its European operations face challenges from stricter emissions regulations and rising consumer preference for local automakers' EV models. The European Union's crackdown on carbon leakage via tariffs on imported goods further complicates Tesla's supply chain strategy. Political controversies. Musk's alignment with Trump fuels backlash. Elon Musk's alignment with President Trump has become a double-edged sword for Tesla. As a vocal supporter of the former president, Musk drew ire from progressive groups and lawmakers, sparking protests outside Tesla stores and online campaigns targeting its brand. This political exposure contributed to brand damage, as critics associated Tesla with divisive policies such as border wall funding and regulatory rollbacks opposed by environmental advocates. The backlash has even seeped into legislative agendas. In New York, a proposed bill aims to ban Tesla's direct-to-consumer sales model, a cornerstone of its business strategy, after July 2026, citing Musk's political affiliations and his role in federal workforce reductions under the Trump administration. The bill, if passed, would force Tesla to adopt traditional dealership models, a blow to its cost structure and customer experience. Production shifts and Chinese competition, BYD's surge. Amid these challenges, Tesla is recalibrating its production strategy. The company has accelerated Model Y assembly in Texas and Berlin while pivoting away from China amid US-China trade tensions. However, this shift comes as Chinese automaker BYD overtakes Tesla in global EV sales, posting $100 billion in revenue in 2023, a milestone Tesla achieved only last year. BYD's success stems from its affordable models and robust domestic market penetration, though it faces hurdles of its own, including labor disputes at Mexican plants and delays in US expansion. Tesla's response includes plans to double production capacity by 2025 through new factories in India and Southeast Asia. Yet analysts caution that scaling up globally risks replicating the supply chain bottlenecks that plagued Tesla earlier this decade. Vandalism, FBI involvement, and domestic terrorism label. Tesla's troubles extend beyond markets to physical security concerns. A wave of vandalism targeting its superchargers, stores, and delivery trucks has intensified, with incidents linked to anti-Musk sentiment. The FBI recently classified these attacks as domestic terrorism, citing coordinated efforts by far-left groups opposed to Trump-aligned figures. Authorities have arrested several individuals, including a New Jersey man charged with torching a Tesla vehicle outside a dealership. Such acts underscore the broader cultural divide surrounding Musk's influence in tech and politics. Analysts' mixed outlook, short-term gains versus long-term risks. Despite these headwinds, some analysts remain bullish on Tesla's prospects. Short-term optimism hinges on its dominance in EV adoption and leadership in energy storage, e.g., Powerwall batteries. Price targets above $300 per share reflect confidence in its ability to leverage economies of scale as production ramps up in new markets. However, long-term risks loom large. Competitors like BYD, Ford's F-150 Lightning, and Rivian are closing the innovation gap, while Tesla's reliance on Musk's personal brand poses governance concerns. Leadership turnover, such as Chief Accounting Officer Sumit Nagrath's recent resignation, highlights institutional weaknesses that could hinder succession planning. Geopolitical gambits, Saudi Arabia and PIF reconciliation. Tesla's strategic moves in the Middle East signal a pivot toward energy-rich nations. After years of tension with Saudi Arabia's Public Investment Fund, PIF, which previously sued Musk over scrapped investments, Tesla announced plans to collaborate on solar projects and EV charging infrastructure. This rapprochement positions Tesla as a partner in Saudi Vision 2030's push for green energy, despite criticism over the kingdom's human rights record. Conclusion: navigating uncertainty with innovation. Tesla's journey underscores the fragility of corporate dominance in an era of geopolitical volatility and rapid technological change. While its innovations in EVs and renewable energy remain unmatched, Musk's political entanglements and operational missteps have exposed vulnerabilities. Analysts caution that Tesla must strengthen governance, diversify markets beyond North America, and insulate itself from trade wars to sustain growth. For now, Tesla's stock remains a barometer of broader EV market sentiment, buoyed by demand but prone to swings driven by Musk's outspokenness and global policy shifts. As competitors close in and governments rethink regulatory frameworks, the next few years will test whether Tesla can maintain its edge or become just another casualty of industry disruption.